Recording going. Okay, I want to welcome everyone to Build the Dream, Secure the Capital. We have a presenter from the SBA. We have Christy Hajii, and we're very pleased to have her with us today. But as we get started, I do want to talk about who we are. And we're Boston Business Mentors, and we are here to provide small business education and mentorship. We have a couple different things happening right now that would be of interest to you. One, it would be education through our workshops. Please take a look at the website, watch for our newsletter, check out social media. We are always adding new topics, and we are adding some really good ones. So please watch for those, and they are always free for you to attend. The recordings are also posted so that if you miss something, you can always go back and look at those as well. We also offer a decent amount of information on our website as well. Templates you can download. One section we're developing right now are the blogs and podcasts. Lots of great stories in the blogs. Lots of great articles, not only from Boston Business Mentors, but also from the community as well. Just very timely and important to things that are happening in the world now. So definitely look for those under the resources. There is no doubt the most important thing we do would be our mentorship program. Our mentors are volunteers. They have a variety of skills and experiences. And some of those experiences are positive, some of them are negative, but they've learned from them and they can share what they've learned with you. A mentor can be different things to different people. It might be just someone who's a sounding board. Maybe it's someone that can provide you with the resources that you're seeking. Or maybe it's someone that can help you put together a plan to achieve your goals. Or maybe there's a challenge that has recently come up and you're trying to figure out how to overcome it. They can help you in all those areas. And we are working with people at every phase, whether you're trying to decide if small business is right for you, to planning, to being in business, to growing your business, to getting ready to exit your business. We have people that can help you. You can use that QR code there on the screen to apply for a mentor, although everyone's accepted. It's not really an application, but more of an informational form. But I will also post that at the very end. But I'm going to go ahead and turn things over to Christy.
Thank you, Teresa, and thank you for having me here today. I'm very excited to present on this. I appreciate the support and letting me come on here today. And thank you all of you for joining. I really appreciate your time, taking the time out of a beautiful Friday to sit through this. And I hope you find some things that are worthwhile. And if you guys have any questions at the end, I am here. I am happy to go over anything I can to support you. But my name is Christy. I'm a lender relations specialist here at the Small Business Administration in the Massachusetts District Office. And my primary role here is the access to capital piece, helping businesses get that access to capital and working with our SBA approved lenders in the state of Massachusetts to help you guys get the working capital that you need. So without further ado, I'll get started on the presentation here. Right. So now small businesses, they don't just support the economy, they are the economy. And here at the SBA, we power the American dream by supporting small businesses. Now, we have been doing so for over 70 years. We make that dream of owning a business a reality. Now, we empower entrepreneurs with the resources and support that you need to start your business or grow your business. So even if you're just at the ideation phase, we do have resources to help you get where you need to be. And we are the only go-to resource and voice for small businesses, backed by the strength and reach of the federal government. Now, when we talk about economic growth, innovation, and resilience, what we're really talking about are small businesses. So those entrepreneurs who build, adapt, and keep our communities moving forward. So what is the SBA doing to actually support those small businesses? Well, we do have four supporting areas, four keys to success for small businesses. So we have free business counseling. That's through our resource partners and like our relationships with the Boston Business Mentors. Definitely an incredible resource to use at any phase, like Teresa said, of your business journey. SBA guaranteed business loans, which is what I'm going to really focus on primarily today. We also offer home and business disaster loans in the event of a declared disaster. And that's not just on the business side, that's on the personal side as well. And some federal government contracting opportunities. Now, you guys might find some of these logos familiar. I hope so. So, one thing that all of these businesses have in common is they received some sort of SBA support during their journey. And the one that I really like to talk about is Chobani. So, the founder, Hamdi, he started off with just an idea, like every business starts off. He got turned down for financing through conventional lenders over and over and over again. He was about to give up on his dream and say, okay, well, I guess I can't do this. But then he came across the SBA. He worked with our resource partners and he got funding from one of our 504 loans. Now he is the #1 yogurt brand on a national scale. So I want all of you to have your logos on this page someday with the help of the SBA. Now, we also have a learning center that I wanted to highlight. So we have online courses that help you start and run your business. So our training site, you can get free online courses. You have access to workshops, learning tools, electronic counseling, and other forms of technical assistance. So that is all on our website under our learning center. So whatever you're looking to do, maybe writing a business plan, looking at any legal requirements, financing options, we do have an incredible, incredible resource online. So please take the time and check that out. Right. So now let's talk money. So every successful business, it starts with an idea, but it grows with the right access to the right capital for you. So whether you're launching, expanding, or just trying to navigate your next move, understanding your funding options is really the first step into turning potential into progress to get you where you want to be. So let's talk about how the SBA has some funding options to help you get there. Right. So, like I said, we do have loans to help you in any phase of your journey. If you're just getting started, if you're looking to grow and expand, we do have something for you here. So we do have over 150 approved lenders in Massachusetts that offer SBA back loans and microloans. Now, the great thing about these loans is they do come with competitive terms, longer maturities, lower equity contributions as compared to any conventional lending, some flexible overhead requirements, and that critical counseling and education piece that really is needed throughout your loan journey. So now let's talk about the role of the SBA. So a common misconception with SBA lending is that we actually directly lend here at the SBA to small businesses. And that's not exactly how it works. So if you look at this graph here, on the left, you have the lender's comfort range. So that is your ideal business owner walking into the bank looking for a business loan. That means you have experienced management, great debt service cash flow, great credit, a generous amount of collateral, a sound business idea, and financial reserves. So this is a picture-perfect business borrower. You would not necessarily need SBA support to get this deal done. Now, over all the way to the right, we have the least viable business profile. So here at the SBA, we can't make a bad deal good, but we can make a good deal possible. So if you have no management experience, no repayment ability, an impractical business idea, no financial reserves or equity investments, it may be difficult for a lender, even with an SBA guarantee, to kind of help you get where you need to be, which is where I would recommend working with resource partners like the Boston Business Mentors, just to get to yourself in a place where you can be lendable. But right there in the middle of those two extremes, that's the SBA range. So where the lender is not comfortable to lend to you conventionally, but you still have some really great ideas, you're still a strong borrower, that's where the SBA comes into play. So just to kind of explain how that works, so 100% of those loan proceeds come from that bank. What the SBA does is we provide a substantial guarantee on a pretty large percentage of that loan. So it helps mitigate the risk for the lender to help them get to a yes decision. So let's say you have a $1 million loan. Here at the SBA, with our 7A program, if you're doing $1 million loan, we provide a 75% guarantee to that lender. So what does that mean? That means if something were to happen, the business were to go under, you can't repay that loan. Once the bank does their process, liquidation, everything they need to do, the SBA will then issue them a check for 75% of that remaining balance. So that really encourages these lenders to get those deals done. They can do $1 million small business loan and only have a 25% exposure. So that's really where the SBA comes in to support our lenders to get those deals done that don't meet their conventional credit policies. Now, what do lenders look for? So, the great part of a role like mine as a lender relations specialist is I really do get to see that side of the lenders, what they look for, what they require, and I can kind of gear the conversation with small business owners towards that. So, you have an idea of what a lender is actually looking for before you look for financing options. So, the 5 C's of lending here. They are the foundation that lenders use to turn a business story into a confident lending decision. So let's kind of take a look at some of those and what that would mean to you. So personal credit and character, of course. Now, a lender considers who you are, so management experience in that industry, your past credit history, any banking relationships and loan repayment history. So they take that and that speaks to your character. Any personal reputation in the community as well. So you, of course, always want to be on top of your credit and know where you stand. Transparency is very, very important to lenders. And I hear from them constantly. Maybe the credit score isn't where it needs to be, but they still want to have that conversation because if there's a compelling reason why maybe your credit is a little bit lower, they may still be able to work with you. You just make sure to be transparent, let them know the ins and outs of your situations, and they may still be willing to work with you, even if it's a little bit lower than what they were expecting. Next, we have capacity and cash flow. So this is the most important of the 5 C's because a lender wants to get repaid. They will not lend if they have no chance of repayment. So they want to be sure that you can pay this loan back before they lend to you. So does your business make enough money to pay all of its bills, including the new loan? So they want to ensure not only can you handle this new loan that you're taking on, but you can still meet your current obligations and still have something to eat at the end of the day. So the amount of money that you make or you expect to make, that's your cash flow. That cash flow should be sufficient to pay all your expenses and have that little extra cushion in case something unexpected comes up, which happens all the time. Now, to continue, so capacity and cash flow looks different for an established existing business than a complete startup. So what is the difference here? So if you're an existing business, they're going to look at your historic cash flow. They want to see how you did. They want that historical data. They want to see those tax returns. A minimum of 2 years is what lenders want to see. They want to see your business financial statements and 3 to 5 years of financial projections. Now, if you're just getting started, that lender is going to have to rely on different things because you don't have that historical data to go off of. So what comes into play then? Your business plan. Your business plan is a living, breathing document of your business and what you're looking to accomplish, which is why I very much so stress working with resource partners and working with the Boston Business Mentors to really help you get a solid business plan ready. Personal financial statements. So we don't have a track record for the business. So they are going to look at your personal finances to make that determination and projections. So those projections, those are risky. That they're not using any historical data for those projections. That is a risk to the lender. So if you're a startup and you're looking for funding, you very well might have to go SBA because of that projection based. So that's kind of the difference in cash flow and capacity, whether you're an existing business or just getting started. Now we also have collateral and guarantees. So collateral, it's something of value that you own or will buy with money from the loan that you can also pledge to secure a loan. So most lenders will also require that business owners personally guarantee the business loan. Now, here at the SBA, we do also require personal guarantees if you have 20% or more ownership interest in that applicant business, and a promise to personally repay the business loan even if the business fails. So that's really where the personal guarantee comes into that extra level of security. If something were to happen to the business and, maybe unfortunately you go under, it happens, they still want to see that you have that strong personal profile to still be able to repay the loan. Now, we also have capital and contribution. So we call this skin in the game. So when you have invested your time, your money, that gives lenders a better feeling about this deal. You have interest in making sure this is successful. So they definitely want to see that you are investing in your business as well as them. So owner infusion, money that you've invested in your business. They're going to look at that. It shows your commitment to the business and what you have at risk if that business fails. Now, it's based on the lender and the financing sources, but be prepared to provide some sort of equity contribution into this. So that's where that skin in the game comes into play. Now, here at the SBA, our equity contribution requirements are a little bit different. So we require a minimum of 10% down in the event that you are a pure startup business or there is a change of ownership taking place in the business. Other than that, SBA is silent on equity contribution, and it is going to be negotiated by the lender on a case-by-case basis. Now, with traditional lenders, lack of owner infusion, so lack of you having that skin in the game, usually means that a loan will be turned down. So something to keep in mind, just some background on the capital skin in the game contribution that lenders are really looking for. Now, conditions, of course, also that is a factor. The lender has to consider certain things when approving your loan. So those conditions are the loan amount. How much are you looking for? I will tell you one thing that lenders tell me all the time. When you sit down to meet with a lender, if they ask you, how much money do you need? How much are you looking for? If your response is, well, how much can you give me? You lost them. You lost them right away. It shows that you're not prepared. You need to make sure that the level of debt you are looking to take on is something that is attainable and achievable for you to keep. So you want to make sure that you're doing that due diligence personally before you talk to a lender. Interest rate. Of course, interest rates are going to factor in. Those are constantly changing. Definitely something to be on top of. Use of proceeds. So they absolutely will want to know, what are you looking to use this money for? Is it for real estate to purchase? Is it for equipment, inventory, or is it for those working capital day-to-day needs? They're also going to compare your industry to how the other industries are doing. So they're going to look at people in your community that do the same thing you do and go off of that track record also. So of course, they want to see how you're doing, how you're performing, but they're also going to compare that to the same industries out there. So all of those conditions will factor in to a lender approving your loan or not. So now, how can an SBA back loan help you? So now that we kind of looked over the ins and outs of what a lender looks at, the 5 C's of credit, let's actually talk about what an SBA loan can do for you. So as you can see here, there are many, many different uses for an SBA loan. Pretty much any legitimate business purpose you can use an SBA loan for. So if you're launching or growing, startup, maybe you're buying a new business. That's a little bit risky too. Maybe that business has a strong track record, but you're a new owner coming in. That does also change the full picture. Access to revolving credit, so those day-to-day working capital needs. We do have loans you can use for that as well. If you're looking to purchase, renovate, or expand your facilities, any inventory, equipment, or machinery that you may need. If you're looking to purchase land or real estate, or even export a product or a service, we do have an SBA-backed loan that can assist you. So when do lenders use the SBA guarantee? So as I mentioned previously, if a lender can get the deal done conventionally without the need of SBA support, they will do that. SBA comes into play when there's something within that credit profile that doesn't meet that conventional credit box that lenders really have. So some of the top reasons we're seeing lenders utilize an SBA guarantee: new ownership or business acquisition. So you're buying an existing business. A pure startup. Again, you don't have those tax returns and historical data to go off of. Certain types of businesses. So there are some higher risk industries that lenders are a little bit hesitant to lend to conventionally. Those industries include restaurants. A lot of lenders will not touch a restaurant deal without an SBA guarantee. Collateral. So lenders need collateral. They need to know that if anything happens to this loan, there is something there that they can use to make themselves whole again. Now, at the SBA, we would never deny a loan solely based on the lack of collateral. We are more of a cash flow lender. So we need to see that cash flow. We need to see that that business can support the debt that you're taking on within its daily operations. Longer maturities. So typically, conventionally, we see lenders 3 to 5 years on a term loan. SBA can go up to 10. And what does that longer term really do for you? Well, it changes your monthly payments. A longer term, your monthly payments will be lower and more affordable. So if that's a benefit to the borrower, the lenders may seek an SBA guarantee for that too. And then projections based on cash flow. So again, those projections are risky. If you don't have enough collateral, there's going to be a shortfall. And that shortfall, lenders will not want to lend to conventionally. They want as much collateral as possible to fully secure the loan, but that's not always ideal. That's not always going to happen. So that's also another reason they use the SBA guarantee. Now let's actually talk about our loan programs. So I've been talking about what you can use an SBA loan for, where it fits in accordance to conventional lending. Let's actually talk products now. So our most popular loan program is our 7A guaranteed loan. Now think of 7A as Mama Bear. Within that umbrella, you have bear cubs. So we do have different types of loans within that 7A umbrella. So these are our guarantee percentages for the 7A. And those guarantee percentages, that is basically the insurance the SBA is providing that lender to mitigate that risk. So we can go up to $5 million on our 7A program. We offer the lender an 85% guarantee on loans below $150,000. So that leaves a 15% risk exposure to the lender, and a 75% guarantee on loans above $150,000 all the way up to $5 million. Now, our 7A loan, very, very flexible on what you can use it for. Pretty much any legitimate business purpose. So as I mentioned before, if you're going to purchase machines, equipment, fixtures, buildings, even land, if you're going to finance your account receivables and working capital for those day-to-day needs, refinancing existing debt, that is also a possibility. Lines of credits. So here at the SBA, we do have a term loan and line of credit options for you. If you want to expand or renovate your current facilities or construct commercial buildings. So this 7A loan covers any legitimate business purpose you might need. Now, within that 7A, we have the SBA Express. One of our most popular, most heavily utilized loan programs is our Express program. So with Express, the great part of it is you do have that line of credit option I was talking about, or a term loan. Now, we provide the lender a 50% guarantee on this loan up to $500,000. So that means the lender and the SBA were equal partners on this, 50-50. Now, for any veterans out there, for this Express loan in particular, we do not have any fees. So you do not have to pay the SBA a dime for this loan if you are a veteran. And it doesn't have to be 100% veteran owned, 51% or greater. So if you're a veteran looking for some SBA loan options, definitely keep that in the forefront of your mind. Right. Now, a new and exciting loan program. So we have this incredible manufacturing initiative here at the SBA. We are all about manufacturers and making things in the USA. So much so that we actually created a new loan program specifically for manufacturers. So it's called the Mark Loan, and that stands for the manufacturer's access to revolving credit. Now, I just talked about the express loan. Look at this Mark loan as an express loan on steroids. So it's bigger, it's better, and it's more exciting. Now, with the Mark loan, unlike Express, that caps at 500,000, we can go up to $5 million. This program started October 1st of last year, and it mirrors the guarantee percentages for 7A. So same thing, 75% for 150 plus, 85% for less than 150. And for uses of proceeds, so this is a little bit more specific in what you can use it for. It's really meant for those working capital day-to-day needs, specifically for manufacturers. Now, debt refinance, that's restricted for working capital purposes. Now, the great thing about this loan here is I was talking about the express loan, 10-year term. So if you're going to do a revolving line of credit, you can have a 5-year draw period where you can keep taking from the loan, repaying, it comes available to you again. Once that draw period is over, you have hit the repayment period of 5 years. So that's generally how we see them structured, 5 and 5. The great thing about the Mark loan, if you're doing a term option, we go up to 10 years. But if you're doing a line of credit option, we can go up to a 20-year term. That's insane. That's insane. Think of a revolving line of credit where you have 10 years to take from it and then 10 years to repay it, up to $5 million. So if you are a manufacturer looking for financing, please look into the Mark loan. I'd be happy to set something up to discuss. It's an amazing program, and we definitely want to get the word about it out there. Now, we also have our 504 loan program. So don't think of the 504 as just any other loan program. It really is a catalyst for growth for small businesses. So the incredible part about this 504 is it's very unique in its structure, and there's nothing else like it out there. So when you think 504, think 50, 40, 10. And what does that actually mean? So this loan, it's a three-party approach. 50% of the proceeds are going to come from the bank, from the lender, which means they are in a first lien position. Secondly, we have certified development companies, which are nonprofit organizations that work on behalf of the SBA in this scenario. So they'll come in at a junior position, 40%. Now, if my math is correct, that only leaves 10%. That 10% is the minimum equity contribution we are going to require from you for a 504 deal. So it's going to be a minimum of 10% of the total project costs. Now, the great thing about this loan is specifically for commercial real estate or that heavy equipment. So if you're looking to buy commercial real estate conventionally through a lender, they're going to ask anywhere from 20, 25, maybe up to 30% down, which is very, very significant and really takes a toll on those day-to-day working capital needs that you may have. With the SBA, we only require a minimum of 10% down on this, which gives you a lot of leeway to keep going on those day-to-day business needs. So an incredible, incredible program. They have below market fixed interest rates on SBA's portion. So extended amortization. So we can go up to 25 years on this. That's a very, very great long term, especially considering you have that fixed interest rate on SBA's portion for up to 25 years. That's great. You can finance most closing fees with this 504 loan as well. And collateral is typically limited to the project assets. So this really is an incredible loan program. Again, only for commercial real estate and heavy equipment. But our certified development companies, especially here in the state of Massachusetts, they are incredible. They are very, very well versed on this loan program. So if this is something you're interested in, I'd be happy to connect with you and do some warm intros to some of our CDCs here in the state because they really are incredible. Right. And we also have SBA microloans. Now we have SBA approved microlenders in the state of Massachusetts. So the way this works is we lend them money so they can then re-lend it out to the community to small businesses. So these microloans, they go up to 50,000. It's in the title, micro. Now the interest rates, they are fixed. You can go up to a 7-year term. I know it says 8 to 13%. on there, but it really is a case by case basis. And I have definitely seen lower than that. But the incredible part about microloans is that it comes with great technical assistance. So these microlenders, they're community focused. They want to ensure your success. So they're with you from the beginning to the end, making sure that you are in the right space. So these are incredible people. They're there to help you. And microloans really come into play when you're not bankable yet. So you're not ready to establish that commercial relationship yet. And if that's the case, I would definitely look into a microloan. Some of our microlenders work with only certain parameters, but then we also have microlenders that can go anywhere in the state. So it really a lot of flexibility there. Now, what can you use a microloan for? Working capital, inventory, machinery and equipment, furniture, fixtures, refinancing, and credit card debt. Now, what you cannot use an SBA microloan for is real estate. Right. Now, I want to talk about an incredible free tool we have on our website, and that tool is called Lender Match. So, Lender Match is like Match.com, but it links eligible businesses with lenders. Now, the great part about this is it really gives you your best fit. It'll ask you questions about yourself, about your needs, about your business. Separately, the SBA has our lenders go into the portal as well and create their own profile. So they'll put in their risk appetite, the industries they lend to, the parameters they can lend to, all the way down to county. They take that information from you, the business, from the lender, and 24 to 48 hours, you get your best suited matches on lenders to handle your specific needs. Now, I will first and foremost, whenever a small business asks me, who should I work with? Always, always, I suggest working with the lender you already have a relationship established with. They know you already, they know some of your track records. That would be my first suggestion. But if you want to explore what's out there, make sure you're getting the best option, maybe the most competitive rate. I highly suggest Lender Match. Again, it's free. One thing I do want to highlight is sometimes small businesses go in and they think it's like a loan application system because it does ask you some specific questions, but it's really just trying to get the best picture of you and your business. It is not a loan application system. It's not hitting your credit. You're not applying for anything. It's just taking the information it's asking you, matching it against our database of lenders, and giving you your best option for funding. So if that's what you're looking to do, highly suggest you take a look at Lender Match. Right. Now, if you don't follow us, please do. We have incredible, incredible events that pop up. We have great trainings. Our events have incredible networking opportunities. You can meet lenders face to face. You can meet other business owners, learn from them, maybe teach them something. It really is incredible. So please follow us. That's our general email in our general line. We also have a Twitter handle. Please follow our LinkedIn page. We post all of our events out there. And if you go to our district office webpage, so each state has their own page, and then we have a general page. Ours is sba.gov/MA for Massachusetts. So please go ahead and look what we have going on. And then I have my personal info here. So I don't just want you to go on the website and look for answers if you have a question. I want you to start with me. I would be happy to help you and answer any questions you might have. And if it's not something I can answer for you directly, here in the state of Massachusetts, we have an incredible ecosystem of partners. So I can refer you to someone who may be able to better assist you than I can. But that brings me to the end of my presentation. I know this was a lot of information very quickly. So I am here if you guys have any questions. Please feel free to throw them out there. And if you don't want to ask your questions here on this forum, I completely understand. I encourage you, please, to reach out to me either via email, via phone number, anything that you guys need. I'm here to help.
Well, thank you, Christy. That was excellent. We'll give a chance for anyone that has a question to get that into chat right now. I am going to, I've put up our QR code again on how to get a mentor with Boston Business Mentor so we can work with you on that business plan to get you ready to talk to the SBA or your bank, I should say. But Yeah, so if you have any questions, please get those into the chat right now and we can get those answered. I will be sending out a follow-up email that'll have the recording and the slides today. So you'll have all that information if there's something that you missed today. Okay, we do have a question. Lowest interest term type of loan for paying MOQ for overseas factory, about 100K, so loan might be 60K.
Okay, so that's actually a really good question. A top question is about like interest rates and term types. So I will say here at the SBA, our terms are directly related to the use of proceeds. So generally we have 10-year terms, but for interest rates, the SBA offers a maximum. So the lender cannot go over that cap, but the lender is actually the one that is going to negotiate and price that loan depending on your current situation. So we just offer parameters that they have to stay within, but that specific lender is going to price that loan on their own. So where you go, who you talk to, that rate may vary depending on the lender. So definitely want to have a few different conversations with different lenders to make sure you're choosing your best match. But the only say we have is the maximum that they cannot exceed interest rate wise. The rest is up to the lender.
Okay. I do not see any other questions that have been submitted. Is there something that you usually are asked, Christy, that wasn't asked today?
I tried to cover a lot of the things that
You
I
you did
usually
cover a lot.
that I
Yes.
usually get asked. I'm like trying to draw my brain. What have I been asked before? But I mean, honestly, even if you're not ready for funding options, don't think that the SBA has nothing for you. That's, I guess, what I really want to highlight is we have so much more than just loan programs. Just like the Boston Business Mentors, we have resources, and there's so much you can learn on our website. So we have like 10 ways to start your business. We have so much on our website. So SBA is not just for loans. We do have incredible resources. Before you even think about paying $1 for a business plan, for anything like that, please take a look on our website and check out the free resources first and foremost. And
Okay.
oh, it looks like something else came in the chat.
Yeah, we have a follow-up question. If there's a chance for a follow-up question, okay, is there a way to get a 0% or low interest rate if paying back 60K within a year?
It's a great question. I can say SBA wise, we don't have anything at a 0% option. I would probably maybe have some discussions with lenders. I don't think you're going to find anything with a 0% rate at all. But I would talk to maybe if you qualify for conventional lending, maybe they are willing to kind of negotiate that rate if it is a lower term. So talk with some lenders, use Lender Match, and have that discussion with them, but nothing SBA wise that would match that.
Okay. Well, I think we'll go ahead and wrap things up. Please watch for that follow-up with all the information from today, as well as the recording. And we hope to see you again on a future presentation. And thank you, Christy, for giving your time to talk to our clients today.
Anytime. Thank you so much for having me, Teresa. And thank you everyone for tuning in.
All right. Bye.